Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody, and welcome to the Finovate podcast. We've got a fun one for you today. A speaker from FinovateSpring is joining us for a little bit of a preview. I'm delighted to welcome Sarah Hinkfuss, partner at Bain Capital Ventures, to the show. Sarah, thanks so much for taking the time.
Thanks for having me, Greg. Excited to have the show soon.
Yeah, I'll be down in FinovateSpring in San Francisco in just a couple of weeks. To start, though, why don't you give everybody who's listening a little sense of your background and your role over at Bain?
Happy to. So I'm a partner at Bain Capital Ventures, as you mentioned. We are the venture capital arm of Bain Capital, which is a global multi-asset investment management fund. And we at Bain Capital Ventures invest from pre-seed all the way through pre-IPO in high growth technology companies. And we do that across a number of spaces, including application software, infrastructure and security, commerce tech, and then fintech. And I lead our work in growth stage fintech and vertical software, where there are a lot of embedded finance opportunities as well. In terms of my background, I'm from Wisconsin originally. I still bleed green and gold too. I'm a big Packers fan. I went to school for economics and environmental engineering, and then fell into tech out of school. So helped scale an enterprise software company in the big data predictive analytics space from under 50 to over 500 people during the time I was there. And then we were acquired by MasterCard. From there, I actually got into investing. So started my career later stage at KKR, and then have been at Bain Capital now for 4 years. And then I live in San Francisco and have 2 little kids, a 3-year-old and an 8-month-old.
Wow. So 3-year-old, 8-month-old, and still finding time to come and chat with us. That only adds to the legend of Sarah Hinkfuss. I can only imagine how difficult it must be. Let's get into, obviously, we're here to talk about kind of the fintech side of Bain Capital Ventures portfolio. And I'd like to give our listeners a little bit of insight into what types of companies you tend to work with. Are there specific technologies or company stages that you like to target?
Yeah, so at Bain Capital Ventures, we focus on primarily B2B companies. So it's usually the first filter that we think about. And that's really just building on our experiences and ethos as an organization as well, having seen a number of B2B companies develop their footing in the market and then really scale over time. So we think we can be uniquely valuable partners to companies in those spaces. And then, as I mentioned, we think about we're stage agnostic. And so what that enables us to do is actually be very thesis driven and thematic. And so we spend a lot of time on the fintech team thinking about what are the big opportunities in the market today. So what are the large technological shifts that are happening? How does that impact financial services? Who are the players that are stronger or weaker in the market? Where are there problems that are being unmet? Where there are new solutions that are needed? And so all of those ideas and perspectives enable us to come to the market with a thesis around what we believe should or does exist, and then really seek out founders who are focusing on those areas. And we're able to come to them with a prepared mind and help them partner on building next generational companies.
Yeah, well, I think you're making my job easy for me, because now all I have to do is follow up on the obvious one. What are those big opportunities in the fintech ecosystem right now? And where do you think founders should be pointing their efforts?
Yeah, totally. So there are many of them, but maybe I'll just pick on 4 that I've been excited about recently. So the first one is AI for back office automation. And as I think about the financial services space, so much of the innovation that we've seen in the past couple of decades has been focused on distribution. And so that is to say, the core financial service product itself has not changed, nor has the way that we're serving those products. But distribution or access to those products has moved from face-to-face or analog to the digital space. And that's created these huge companies that we've now seen. So the neobanks of Chime versus traditional players, or all of your insurtechs as well. The innovation was distribution. And what's so exciting about AI generally, and really specifically generative AI, lends itself to this, is the opportunity to think about changing the servicing of financial services products. And that really matters, because that's where so much of the cost comes in. And so a lot of the friction in providing the products, or the cost of serving, of making them addressable for individual customers is because of how many back office staff and how many PDFs and papers and forms that are required to actually serve these products. And so we're at this moment today where generative AI actually has huge promise in helping to streamline and automate a lot of that work. And so I'm spending a lot of time on that theme. The second one I'd mention is embedded finance. This is nothing new. It's something we at BCV have been talking about for a while, and then also the industry at large has been. And in spite of that, I think it's pretty phenomenal how early we are in that evolution. And so I really see this as software companies themselves being the purveyors of financial services. And so instead of going to a bank to get my payments, instead I'm going to my software product that is actually the way that I run my business as a small business, and having them sell me payments as well. So it's embedded into my software experience. Third, I would mention in the capital market space is tokenization. And so capital markets is usually one of the last markets to innovate. It's really the core infrastructure of so much of the way that financial services works. For that reason, it's very highly regulated as well. But tokenization offers a big opportunity to actually create efficiency and also just a lot more transparency and making sure that the assets that we believe they are what they say that they are. And so one example of that is the explosion of stablecoins. And then the fourth area I'd mention are how data and data services are really being built on the back of faster and easier payments. And so with so much technology and changes that have happened with real-time payments in the US, what that's meant is that it's transferred risk from the process of determining who the two sides of the payment transaction are as the transaction is being done over time, to having to do that in real time. And so it's creating a lot of opportunities for better data services products or better identity verification products. And so really excited about the evolution of that market as well.
Yeah, well, that's a lot for anybody listening on the innovation side to unpack, but some really good insights there. Before we actually pushed record, we were talking a little bit, and I want to come back to a piece that you mentioned kind of at the start there, where we're kind of talking about how so much of the technology that we're seeing right now is really around either delivering an existing product in a new way or making a gain from an efficiency standpoint, being able to service it more effectively and efficiently. And we were kind of lamenting the fact that there's not necessarily new bank products that are coming out of all these innovations. But obviously, this is something which is really difficult to do. Can you talk a little bit about where kind of that friction comes from and why it's so difficult to kind of actually take all these technologies and create something that's a genuinely new banking product, as opposed to continuing to look for efficiency or more opportunity in the products that are already out there?
Yeah, totally. It's such an interesting philosophical question, because I think it's easy on the outside of fintech to say, where is the innovation in fintech, to your point, that all of these new products that people are excited about today are actually just digital representations of products of the past. So one great example is buy now, pay later. Obviously, this brand new product space that was created. And at the same time, what it did was just replicate the experiences of our parents in our past of actually taking installment loans that you would have from the furniture store, and instead having it become a digital experience that was real time at point of sale. And so I think the critique that people say is, well, what's actually new or what's revolutionary or game changing in fintech? And that's true, but what I think it misses are two fundamental truths about the space that I think are actually assets for the space as well. So one is that at its core, financial products are pretty simple. It's just about value transfer. And so if I do work, I want to be paid. If I have something that I want from someone else, I need to pay them. And then there's a lot of complexity that comes in with just shifting that across spaces or across time, right? So all of lending or securities, right? Like all of that is just across time and across space. But the core of it is actually really, really simple. And so when people challenge fintech and they say, oh, like you're not creating a brand new thing, I think it's already pretty simple and fundamental. And so the opportunities really are, and how do you make it faster, cheaper, better, more resilient? The
Yeah.
second thing I'd say is that there is a lot of regulation that creates friction intentionally in the process. And so even if there are big, bold ideas, which again, I think are just harder given the fundamental truths of the space, but even when there are big, bold ideas, regulators have to play a role in protecting consumers and protecting businesses. And so that's where the SEC comes in, or the Consumer Financial Protection Bureau, the CFPB. And so they make sure that there are hurdles that innovators have to go through to make sure that people on either side are actually protected. Maybe one example I'd share, Greg, though, that I do think challenges what people are saying on innovation is parametric insurance. And so it's actually a brand new product that's been created in insurance, where instead of just having a payout that is determined based on an assessment of losses, like a claim against an insured property, rather it is determined in a binary way based on agreed upon metrics set up ahead of time. And so the payout is known based on what actually happens in the model, which is why it's called parametric. And so that example of innovation has come to address a new challenge that we're seeing in the world, which are risks that are very large and unknown, but can also be measured using statistical models like climate. And so I do think that when you have new problems, that does invite innovators to think about new radical solutions.
Yeah, no, that's a really comprehensive answer, and I think it's important to highlight those areas where fintech actually being maybe a little bit slow to move can actually be a good thing, right? It is something which, at its fundamental level, we need to have a massive amount of trust in everything that's financial, and so the regulations exist for a reason. But I think to your point, there is always an opportunity for when a new challenge arises for something like that to come into space. And coming back to your initial example of a furniture store, that is actually the second monthly payment I ever had in my life. I had a rent check that was due every month, and then shortly thereafter, I actually bought a couch that required me to pay monthly payments for something like 18 months. And I felt so grown up at the ripe old age of 22.
I love
Like
it.
we're in it now. We're responsible. We're consuming. We're doing what we should do at
Yeah,
the President's Day furniture store sale. So I
I
do
love
want to
it.
make sure we talk a little bit about the funding side of things, because so much of the last couple of years has been dominated by news stories about fintech funding. Obviously, it's not what it used to be, but from our perspective here at Finovate, it looks like more capital is starting to flow into the space. It's still maybe moving a little bit slowly. What are you seeing from BCV?
Yeah, our perspective is that fintech definitely went through a reset. And I think that was driven by the reset in public markets, which came from the change in interest rates. But that was necessary, that there was so much capital going through the ecosystem that it enabled unnatural things that were just not sustainable. And so what we've seen now, and I do think that the worst, so to speak, is behind us. Like, I think we're coming back into the middle, that I think will be persistent, where we have the focus on building unit economics strong and durable, but high growth companies. And those are the ones that will be resilient to be able to continue to scale as the economy is great some years and as the economy is not so good in some years. And so I think the experience fintech has had has been shocking, right? Because we were the darling of venture. There was a lot of fintech is ultimately a barometer of the economy. And so there was so much excitement. We had all these other investors coming in. There was so many ways that you could see huge companies being scaled and grown. And oftentimes you had replicants of the same business model in the same market. But it was not something that would persist in a sustainable way. And so I do think we're now on much stronger and more resilient footing. And I think that just sets up the entire market in a much better way going forward as well.
Yeah, certainly. I think we're in a better spot, maybe a slightly more realistic spot. in terms of the funding coming into the space. I'm looking at the clock and I realized we were supposed to be making this a preview of what you're going to talk about at FinovateSpring. We haven't talked about that at all. It's been such a fun conversation, but I do want to just take a couple of moments. Can you give us a little bit of a teaser about what you'll be talking about at FinovateSpring coming up in a couple of weeks?
I'd love to. So I am so lucky that I'll have 3 amazing founders on stage with me talking about the opportunities for automation of work within banks. And so specifically, maybe the best way to think about it is an analogy. And so if you wanted to get around the city and go to a place that you didn't know where you were going, remember when I was really young, we would have in the door, in the little pocket, we'd have a bunch of maps. And so if I was going to a friend's house across town, my mom would pull out that map, put it on the car, and then we'd look up where that street was, and then look at the quadrants on the map to figure out from where we were, how we would get there. And if you weren't sure where it was, you'd have to open the map and look at it on your way. And then maybe when I was in grade school, MapQuest was a big thing. So you'd be able to put the maps in, you'd be able to put the address in and then print it out. And then you would have it available that would have turn-by-turn directions. But if there was traffic that changed, you would kind of be stuck because you would have to look for the detour, but your MapQuest no longer was relevant. And then you had the advent of Google Maps and Waze that came in. And so what that allows is that because it has real-time traffic information, even if you're going to a place you've been many times, you may take different turns because it's responding to what's actually happening on the roads in real time. And so we've gone from a world where we would have to pre-plan what we did and ask questions of technology in order to get the answers in a static world, to instead being in a world where the technology is actually telling us more than we could ever know ourselves. And so we are responding to what technology gives us instead of asking technology for things. And that is exactly the transition that we're seeing now when it comes to what AI is allowing us to do in work. And so we're moving from a world where we are asking technology to do work to a world where technology is pushing work to us. And so, again, I'm talking to 3 amazing entrepreneurs that are really leading that revolution in financial services.
Yeah, no, that's excellent. It's going to be a super fun session, obviously a super fun event overall. A lot of innovative tech companies going to be on display up there, including many focusing on some of those hot areas that you were talking about earlier on in the episode. I feel like we could keep this running for quite a bit longer, but unfortunately, we do have to end the episode here. I want to thank you again for joining me today to chat with me, and then again for joining us in San Francisco, especially with 2 young children in the home. Really appreciate the time and energy you're spending with us, and I look forward to seeing you in person here in just a little bit.
Likewise. Thanks for having me, Greg. Can't wait for the show.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.